Good morning, traders. Today is Friday, October 15th. My name is Charles, and this is the Pirate Traders live stream. All right, well, let's start by talking about something bullish, and then we'll talk about something bearish. Okay? First things first, market making higher lows here, and then breaking out through this downtrend that we had on the daily candlesticks is a very bullish signal to see. And we do expect the market to get excess to the upside as a result of breaking through that pressure, that downward pressure that was the downtrend. Okay, so that's very bullish, and it means that looking in the weeks and months ahead, we could potentially see a path forward to head back to all-time highs. Okay, boo, exciting, right? But then we must immediately change our focus as intraday traders to the structure that got us up here, right? And that's where we got to bring up the concept of excess. Okay, so the day that we made the low that began this like push higher, we did it on weak references. 3 time frames in a row, the market pushed its way higher on weak references and then spiked in the M period. Okay, and so now all of this from the high here, all of this is excess. Okay. This is excess in here. And now today, once again, with another gap higher, more excess. Now, excess leads to balance. There's 2 ways to balance off excess. One way is you just trade up at higher prices. You just rotate until the market gets acceptance of those higher prices, and then you can either break out to the upside or break out to the downside from there. Or the other way you balance off excess is you push higher and then you pull back down with price looking for support. Okay? So I brought this up yesterday in the private room, and it's worth talking about again, that it is not uncommon for a market when it breaks through a downtrend line like this to come back and test it for support. And then when it acts as support, that's when it really takes off to the upside. So do I think we're going to get that big of a pullback? I have no idea. I doubt it. But it's worth keeping in mind that the market has had a ton of excess getting us to the open this morning. Okay, a ton of excess that pushed us up here, built on top of weak references. We also have a gap below us that needs filling. And at market open today, we will have 2 large gaps that need filling. So the probability in my mind, despite the fact that we broke out through that downtrend, and it is very bullish on a swing basis, my feeling is that we need some balance today. We need to either rotate at higher prices or we need some kind of pullback, maybe even down into this gap. So I'm keeping a close eye on that. Now zooming in, market's going to open in 2 minutes. Zooming in, obviously overnight inventory is net long, almost 100% net long. So we would expect some sort of counter auction to the downside. That counter auction will likely lead to an attempted gap fill, right? People are trying to trade the market down to yesterday's high in order to fill that gap. So that's the first thing I'm going to be watching at the market open this morning. Do we get that counter auction to the downside? And how far does it push down before it finds support? The earlier it finds support, the more bullish it is, right? If the market opens and it immediately trades higher, that's the most bullish. If it trades down a little bit, finds support, and then trades higher, that's a little less bullish, but still obviously very bullish. It's a gap and go. And then the least bullish scenario would be the market trades all the way down to yesterday's high, finds support there, but again, that is still a gap and go. That is still an extremely bullish scenario. If the market trades down and fills the gap to yesterday's high and then can't find support in here and continues lower, well, then I'd be looking to short it as a potential pullback, right, to balance off all this excess I was just talking about. So there you go. Going to open with a giant gap this morning. All right, the market is open. Let's see if they try to fill that gap. Internals obviously opening very bullish, but they'll need some time to settle in here. All right, good morning, RK Leon. Good to see you. Welcome. Bob is back with us. Good morning to you. Cotton Dog is here. How's it going? Amir is here. Good morning to you. Mediterra saying pause weekly TGT in this area. I'm not sure what that means. Jose, good morning to you. Design Up, good to see you. Welcome. Vincent is here. Good morning. Philip, good morning to you. Ronald, ahoy. David Glass, good to see you. Welcome. Okay, so far, very small counter auction to the downside. The higher up here they find support, the more bullish it is. But this is terrible taper for a low. So it does feel like we need a bit of a push lower. River Rock, good morning. It is a sunny day, and I do have a cup of coffee, River Rock, so you nailed it. Alexander, good morning to you. David V, good morning. JG with the GM. Ashik, good morning to you. Oh, Target. That makes sense. Good morning, Brian. Two Man. How's it going? Cy Worker, good morning. All right, here we go. Getting a little push. Are they thinking gap fill? Can they go all the way? Of course, that gap fill is to 44.31, which is yesterday's high. Once again, finding support there would be bullish for continuation higher. But pulling back down into yesterday's range would be bearish, as we could potentially be heading down to repair some of the weakness below. Mark, good morning to you. Just started following the channel this week. Awesome content. I appreciate it, brother. Smash that like, smash that subscribe, that notification bell. Stay tuned. More to come. Black Cat, good morning to you. Cotton Dog, tempo seems steady. It's true. There's no panic selling in here. Not yet, but you can see the overnight. They put a lot of long inventory in here. So if the market were to push below that, they would likely get squeezed a little bit. Nicholas, good morning to you. Welcome. Enchuvera? Welcome, brother. Happy to have you. All the way from Brazil. All right, let's try something out real quick. I'm just curious, how many of you are looking for the market to find support here and continue higher? Because you just want to just get a face-melting trend day higher that never ever ends? Or how many of you want the pullback to fill the gap? So let's do it like this. If you think the market should find support here and trend higher, hit the like button right now. Let's get those likes for if you think it's going to find support and go higher. Okay, about 10 people or so want to see the market push higher from here. So now if you want to see the gap get filled, you want to see the market get back down to yesterday's high, let's hit that like button. Let's see how many people are looking for a gap fill this morning. Just smash that thumbs up so we know how many. Oh man, it looks like the gap fills have it. People want to pull back. They don't trust an endless trend higher. There you go. Mackie Max, should you hit the like if it's rotational? Yeah, definitely rotational's got to hit that like as well, just so we know who thinks it's going nowhere. Although I was going to say, if it's going to rotate, it will likely rotate, in a much larger range than this. Jokes aside. It'll be hard to be sure if this is support or not unless the ticks here are able to push their way to the zero line and then they find support at the zero line. Then it is buyers stepping in here. But right now, this could just be the market absorbing that overnight inventory. David V, how about a partial gap fill? Yeah, that's true. A partial gap fill. I mean, that's what we got right now. That's what this is so far, is a partial gap fill. And they are very bullish. Usually the start of a trend day higher. Mangala, good morning to you. Diane seeing a retest of 44.72, then 45.19. You think we're going to get that today? 72. Could be. Jonathan, good day. Cotton Dog, is it reasonable to think that all the shorts have been squeezed and further upside will be due to FOMO buyers or other time frame buyers stepping in? Kind of, yeah. Whether this is that moment or not, I don't know, right? So like that's what, when we step back and look at the daily, let me just pull that up here again. You know, like this would be the moment, right? Breaking above this would be the moment where a lot of the shorts start to get really worried. Because as long as this downtrend, like you could have even gotten short here, and as long as that downtrend held, you were in the profits again. You know what I mean? So you could have trusted this downtrend, but now that that has broken, we should squeeze out all of those shorts. I can't tell you though if that's happened in one day. No idea. If we were to get a crazy day where it just pushes higher all day today, that would be a sign that that's more shorts getting squeezed and that they are not all squeezed right now and that they're getting squeezed all day today. But at whatever point this breakout goes rotational, so it either rotates at higher prices or it pulls back down to look for support lower, that will be when new buyers are stepping in. That will be when you know you've squeezed out all the shorts that needed squeezing out from the down move, and now it's time for new buyers to step in to push the market back up. But we don't know if that's what's happened yet. Mangala, no FOMO for me today. Good call. Good call. Design Knob, we got some data coming out at 10 a.m. We'll look for a little flutter in price when the algos kick in. All right, Zeb's in here also calling for a push to 6061, then rotational. David V on the news, Bitcoin futures ETF starts trading next week. That's a big one. Oh, Jesus. Bitcoin's at 59,000. It's gone up like $4,000 since yesterday. Oh, that's great. Pro shares, of course. There you go. Well, either way, Bitcoin is a buy the rumor, sell the news asset. So whenever it does finally launch, probably Bitcoin pulls back that day. All right, they're building support. They're keeping the ticks above that zero line. All right, so far it's acting like a gap and go. They're building in support. The next step is to begin to break out to the upside. Get a little push, build volume higher. Yeah, design up. The NQ does look a little weaker. Let's look at that. Hmm. Well, the NQ, it did gap up, but it already it missed its gap by like a single tick. No, it looks like it filled it from here. Oh, okay, it came right to yesterday's high. So it filled the gap, but it left behind a poor low. So that is a very interesting scenario for the NQ there. Obviously, that's in need of repair. But it doesn't quite have as much excess as the ES does. Yeah, so definitely NQ weaker. Needs to repair that poor low. Once it pulls into this node of volume from yesterday, where the overnight found support in here, can it find support? If not, probably looking at a larger pullback. So say if it gets below 15,018, gets below that level, you're looking at a larger pullback. Back to the ES. Tom, good morning, brother. Welcome. Okay, that old poor high is repaired. And it looks like the bulls are in charge this morning. Looks like a gap and go. So now what they should do is build volume higher. They should start to bring in some pink candles up here and keep pushing. On the S. And when you set your trade, do you usually set an amount of points? No, I do not. Not either for profits or for stops. I base my position size on where I'm putting my stop in terms of points. So like, let's say I wanted to go long right now, right? I think the market's going to keep pushing higher. So I would ask myself, all right, if I was going to go long right now, where would I put my stop? Well, I'd probably put it like down here, right? So from 55 to 48, okay, I'm risking 7 points, right, as a potential loss if the market were to trade back down here. So I'd say to myself, how much is that going to cost me if I have like a contract in the ES, how much is it going to cost me if I have a contract in the MES, and then I just kind of decide how big of a position I'm willing to take, as opposed to like always having a stop that's 2 points lower or whatever. Like I choose the stop based on the best location, and then I choose how big of a size I enter in the trade based on how far away the stop is. And I don't have like exact math. I just kind of know in my head. And then when it comes to taking profit, if I have a specific target, again, it's based on, support or resistance or something like that, not a certain distance from the entry. But the goal is always to try to let your winners run as far as you can. So I generally try to squeeze it as far as I can get it to go. Okay, so the market is one time framing higher here in the B period. That is bullish. We also pulled the POC a little bit higher, which is a little bit bullish. So I'm going to go ahead and say I'm bullish here. This looks like the ticks are alarming. They're staying above the zero line, but they do look like they're starting to trend down. And of course, we left that poor low behind on the NQ that's in need of repair. So I'm only subtly bullish here, but this is a gap and go. We're one time framing higher. I can't ignore market generated information. And I'm trying to take my trading full time and leave the corporate world. Any pointers? Definitely going to join the Brigade. Well, yeah, first step, join a Brigade. It's $10. It's a very small investment. So yeah, I think that's a great starting point. But yeah, I would say if you're thinking about leaving the corporate world, first things first, if you have less than $20,000 of capital to use as risk capital, that needs to be your number one priority. Is just take money from your job, put it in a savings account, and do not even consider quitting your job until you have at least 20,000. And that's not like your emergency money for like paying for bills and things like that. That has to be risk capital, meaning money that you have that's just for trading in the markets and not for anything else. So a lot of times I think about it as like that's money you would have spent on shit you don't need. Right? That was a night out at an expensive restaurant, or that was, some thing you would buy that you love to waste money on. Like instead of buying those things or doing those things, put the money in a savings account. That's your risk capital. So step one, have 20,000 in savings. And if you don't yet have that much, just paper trade until you do. That's the first piece of advice. Second piece of advice is get a consistently profitable system before you quit your job. So every day be winning over and over and over again for months before you consider really quitting your job. Jang rotation. No, no rotation. Market's still trending higher here. Just pulling back for a little bit of support, back filling some low volume nodes. I would get nervous about this market if it got below this node of volume down here. So let's say if it got below 44, 47. Anything above there, it can find support and continue higher. NQ is dragging. Yeah, the NQ is. We got some divergence here. Bullishness in the ES and like bearishness. Well, it just looks like rotation right now. But yeah, look, another poor low. Poor low stacked on poor low. That sucker needs to be repaired. And once they do, you'll begin one time framing lower. Very interesting. Somebody asked earlier about shorts getting squeezed. Clearly, there's still some shorts in this market that are slowly giving up on their positions. That is what is causing this much excess. Fausto, on it this morning. I wouldn't say that learning to cut losers is your last hurdle, because I can tell you from my experience, there's always a new hurdle. Each thing you figure out how to do better, you then realize there's this other thing you got to work on. The battle never ends. But yeah, I agree with you. It's one step at a time. And right now the step is learning to cut those losers. And I also agree that once you conquer it, once you can have winning trades, not for 3 months, but for, years and years and years, you'll make back all your losses. Tenfold. All right, so this is a classic trend day move, pushing price higher, building support at a higher price, bringing in volume, pushing price higher, building support at a higher price, bringing in volume. It's looking like this trend is going to continue, despite the fact that the NQ doesn't want to join the party. Come on, NQ. Still very poor low there. Maybe the rut is the new playmate for the ES? Well, that would explain it, right? They're selling the mega caps and they're buying the low caps. And for AMP, how much does a contract cost? Well, margin is different in futures, as in stocks. You're not borrowing money from the broker. But yeah, it's like 400 is what it costs to buy an ES, and I think 50 for a MES, or 40 for an MES. Yeah, you can trade after, like when the overnight market opens, you can trade with that margin in the overnight. But if you hold a trade through the close into the overnight, then you have to have much bigger amounts of margin capital. I should just make a thing that explains all this. People ask this question all the time. I should just make a blog post that explains it. Cotton Dog, if you got a link, send it to me. Shoot it to me direct message on the Discord. Salmon River saying, pay attention to the low of the day. Testing on NQ. Looking for the repair of that poor low. But then the question becomes, do they find support in this node of volume just beneath it? Nope, what's the difference between the blue, orange, and pink nodes of volume? What color node of volume do you pay most attention to? Yeah, it's a great question. So essentially what you're looking at is there's two separate profiles that are right next to each other here. The profile that's got the volume in the blue colors, that is the overnight profile. So that's basically from market close at 4 p.m. Eastern on 4 p.m. Eastern to market open at 9:30 a.m. That's all encompassed within this profile on the left here, which has the blue colors. And then the ones with the red and pink colors, that is the regular trading hours. So that's just the market open in New York. And the way the volume works over here on the left is that the red color, the darkest color, that is the highest 30% of volume. The pink color is the middle 40% of volume, and then the white color is the bottom 30% of volume, and it's the same for the overnight. The dark blue is the top 30, the middle blue is the middle 40, and then the white is the lowest 30. And I don't look for any one particular color. I just look at where the colors form, right? Are the biggest, darkest nodes, are they above one another? Right? Does that show me that the market is building volume at a higher price? How thin does the volume get between them? Things like that. It kind of gives me little ideas about what the market will do when it gets to that particular level. All right, ticks are starting to get bearish here. They're trending down, and they're starting to push below the zero line. So we may be running out of buyers here at the high. Let's take a look at the NQ. Has it repaired that poor low yet? Not yet. Did we post gap numbers? Well, I don't post gap numbers anywhere, so I certainly didn't. But if you're wondering what they are, the top of the gap is 44.44.75. The bottom of the gap is 44.31. And then the gap below that, the top of it is 43.90, and the bottom is 43.65. Can I explain the difference in the 6 charts that I use? Yeah, I assume you mean the internals here. So this is what I call the internals. It's basically what I use to give me insights, sort of like looking under the hood of the market. Might be one way of thinking about it. So they all kind of represent buyers versus sellers on the underlying assets. You got the breadth up here on the left. You got the advancers versus decliners in the center. And then over here on the right, this is the SPX on the 15-minute candles. Then down here on the left, you've got the ticks for the NYSE, and then in the middle, the ticks for the NASDAQ. Bottom right is the NASDAQ, the NDX. And the reason I have these two charts over here is because I just use it to look at this 20 moving average. The 20 moving average on the 15-minute candles, if you're using just the regular trading hours, tend to be very strong support resistance intraday. So I literally am just watching it for that, for those support resistance lines. And then on these four, I'm basically looking for the same thing on all of them, which is like, what direction are they trending? Are they trending up or down? Are they just rotating? Are they just going back and forth? And are they above or below the zero line? Okay. The ticks, the bottom two down here, these are the most like effective for intraday trade. These ones are a little slower, so sometimes they don't really give you a good signal until later in the day. But the ticks can kind of tell you almost in real time what's happening with the market. So this is a great example. We're up here at a high. It's starting to break. We could tell that was going to happen because the ticks have been trending down and they broke that zero line. And so that's kind of a sign that we're running out of buyers up here. And then surprise, surprise, the market's pulling back. So I'm looking for support in this node of volume right around from 44.49 up to like 44.51. Looking for support. If we can find it there, we can continue the uptrend. But if we start to trade lower than that, we might be heading down to fill the gap. Let's pop back over to the NQ. Still got that poor low. Still in need of repair. Cotton Dog, Charles, the red and green dashed lines on your tick chart, could you comment on how you use them? Yeah, this just points out where the plus and minus 1,000 levels are. That's sort of like a overbought, oversold signal. A lot of times if the market gets that overbought to the upside or that oversold to the downside, it'll get like a little bounce. So it just kind of gives you an idea. And if on a day where you see the market keeps getting above 1,000 or below negative 1,000, that's like an extremely bullish or extremely bearish day, because it's not common to spend much time above or below those levels. And of course the blue one just shows me where the zero line is. All right, we're getting down into that node of support. Can it hold? Well, the NQ repairs that poor low. Miles, look above and fail? Not really. Do you mean look above the overnight and fail? No, I mean the main focus is the gap, right? Is it still a gap and go? And so that we'll know based on the uptrend. So as long as the B period low stays above the A period low, it's still a gap and go. The market is still trending. But if we print the C period right now in 1 minute and it gets 2 ticks below the B period, then it's no longer a trending day and we look for the gap fill. We look for the market to trade down to yesterday's high, which it looks like it's getting ready to do. Okay, so there's your printing of the C period. Can the C period low stay above the B period low? If so, the trend remains intact. All right, guys, and with that, I'm going to bid you all farewell and switch on over to the private stream. If you're not a member of the Brigade, there's a link in the description. Only costs $10. It's pretty friggin' awesome. You should join. If you are a member of the Brigade, I will see you on that live stream in about 1 minute. For the rest of you, I will see you Monday morning. Thank you very much and have a great weekend. Bye-bye.